Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Monday, June 6th, 6:26 a.m. as I'm starting the video. And as always, please run your player at 1.5x. Quick look at futures. Bitcoin is up 6.5%. Oil's up 0.6. Equities, nice pre-market rally going on. 1%, gold's flat, copper's down 0.8, and nat gas is up 5%. Not a lot going on the macro front today. Couldn't really find much, but I do want to point out that next week is going to be a really big week. Wednesday, June 15th, stands out as really important. We've got a big VIX expiration Wednesday morning. We've got an FOMC statement at 2 o'clock Wednesday. And then we've got a really big June monthly expiration on the 17th, a week from Friday. And as you know by now, these big options expirations can act as, and often do, act as pivot points in the equity markets, either rotating down lower or higher. After the big event risk of the FOMC and then the option expiration has passed. Not a lot going on the earnings front as we begin to wind down. The only name I see for this afternoon after the bell is Coupa Software. But of course, you can go to the website, and on the blog, I've got the earnings calendar so you can pick off names that are interesting to you. So let's kind of wrap up or start off with our indexes. We'll plow through the FATMAAN names and take a quick look at the energy complex. Starting off with SPY, we spent a week in this chop zone here between 410 and 415. You know, we get a big day and then have a bad day, good day, then a bad day, you know, up 3%, down 3%, those kind of days. And they're kind of rough to manage unless you're really nimble, you know, intraday trading, all that kind of stuff. But for swing traders, nothing has really changed. We've stayed pinned between the 8 and 20 moving averages below, and the rallies have been capped by the 50 EMA. And I think those are the levels that you can focus on as far as looking for either a breakout or a breakdown. So I think we're in a holding pattern now, a tug of war. If you take a broader view of the last week, you can still make the case that this is a consolidation of the big move off the floor that started 2 weeks ago and lifted us up from 390 up to 415. And if you were to box this out, you could say that looks like a bull flag. Now, whether it resolves bullishly and we get a push up towards 430, that would be great. But there still is a 50-50 chance, I would say, that this rolls over and we begin a leg down. So I'm still positioned bullishly. I'm going to stay that way until proven wrong. And I think just looking at round numbers, you got to be getting concerned on breaks below 410. And if you're long, breaks above 415 will, be constructive. So I think, just speaking in round numbers, I'd consider between 410 and 415 just being in the chop. If we were to take out the 50 at 417.30 or 417.86, I think we would have room to run to the upside and potentially fill this gap up to 430. Moving on to the 60-minute chart, I've got the upper gap highlighted here. We've got a gap below that is yet to be filled. And now we've got a 1%. If that holds in the pre-market, we're going to have, say our open is up here around 413, whatever it may be. We're going to have gaps above that are open, and then we're going to have the opening gap below as unfilled. So it's going to set up as a tricky open, as it usually does. Do they just gap and go higher, or do they come back to fill that opening gap? And what I would say is, if they do come back to backfill the opening gap and bring it back down to yesterday's close at 410.5, right in that area, 410, 410.50, and it holds, that would be a great place to try an objective long with a stop just below. That would give you a real nice objective entry for them to just say, okay, we filled the opening gap, now go higher. And of course, you always got your stop loss below in case you're wrong and they decide to take it lower. Moving on to the Qs, very much the same type of setup. We've got the 8 and 20 below price acting as support, but we've yet to come up into this major zone of resistance between 317.35 and 322. You can see in green here the declining 50-day moving average moving ever lower. So I think this 317 area is going to be, proved to be very important on the chart. Why? Well, number one, you got the 50 there. That's always important to reclaim on any up move. And then you've got these prior lows and all this congestion. We've got a large-ish volume over price bar here. So that's going to be the big hurdle for the Qs. But if we were to be able to take out 322 this week heading into the Fed, then you've got an opportunity to fill this gap up here to 330, and then above that 340 if price has enough power to come up and potentially test the declining 200 EMA. So for the swing traders out there, I think you got to focus on 305 as support. We've come down to test that on four consecutive days. We had Friday, we had the big day Thursday, Wednesday we tested it. We tested it every day last week, and it held on all those occasions. So support is support until and unless broken. So I think your default position is 305 is going to hold until it doesn't. So just like on SPY, we're going to have, if the pre-market holds, we're going to have on the open, we're going to have this gap above that is yet to be filled, and then we're going to have a gap below on the open that has yet to be filled. So there's going to be gaps above and below, and it's anybody's guess which one they're going to try to fill first. So I think your objective level for a long this morning is going to be a pull-in to 305 that fills the bottom gap. You can get long at 305, or you can buy the breakout into the gap at 310.50. See, we've got essentially a $4 gap above that would take us back up to Thursday's close back at 314. and then we've got the this major resistance zone at 317.50 up to 322 that would have to be surmounted to keep the rally intact. So just watch those gaps on the open this morning. IWM really outperformed on Friday, down only 0.9%. And you can see here, price bumped its head at the 50. So we are trading just below the 50. I think we're up about 1%. So, on the open today, we're going to be, if we were down 0.9 on Friday, and now we're up 1% on the pre-market, you can look at the prior high at 188.76, or where the 50 lies at 188.38. That can be, let's look at it on the 60-minute chart. That can be your objective line, the Thursday high, because if we open up 1%, we'll have that gap below, and then if they take it higher, then you've got a line right at the top of the prior gap, and that'll coincide with this morning's gap higher. This gap will essentially look almost the same in the sense that we're going to open near the Thursday closing high, if that makes sense. So a gap and go would open up the door towards 190, and then this gap up here at 191.50 would be your upside targets. And you can see this chart looks a lot different than SPY and QQQ, where we had a run off the floor, we had a bull flag, we had a bull flag breakout, and now outperforming. So this is on a much cleaner upward trajectory than in SPY and QQQ, where we've seen a week of pure consolidation. Moving on to Facebook. Don't forget on the 9th, which is, what is that? 6, 7, 8. On Thursday, the ticker changes to Meta, META. So your charting platform will probably update that, but just so you're aware. Like everything, there was a gap down on Friday, and now price came right back into this support layer that we had at more or less 190 and a half. So I think that's your objective level for today. Now, of course, if the pre-market stuff holds, then there'll be a gap below. But I think this 190 area will be a good area to focus in on as far as an objective entry if they pull back and fill the morning gap to the downside. You can be long against this level at 190 and then look for a move back up towards 200, let's just call it. Top of the gap is actually like 199.50 to fill this upper gap right in here. Facebook got slammed. They had I guess a downgrade from that well-regarded Apple watcher, Katie Huberty from Morgan Stanley, all scared about the App Store. Big gap down, slammed it down to the top of the lower gap. There was a reach down candle on Friday, but to me it did not fill this gap. So I left the gap in place. You can see that after that reach down candle, price came right back up to the top of this gap at 145, and that's where it closed. So you got some pretty clean entry points as far as an entry into this gap at 148. If it's a gap and go this morning, we open up a little bit, get into 148, you can buy it there. You know, entering a gap from below is a buy signal. Then you can set your stop just below and see if you can't get this $3 gap fill back up to 151. Tesla, bad day at the office. And, you know, Elon got a really bad feeling. The chart gap down. You can see that I've got the gap from 743.40 up to 775. Came right back down to this 700 level. You can see support, support, support. And so now, you know, 700 is your pivot for today. Any kind of, I didn't look where it was at pre-market. I'll just assume it's higher. There'll be a gap below, down to 700. And then if you get that fill, 700 is going to be your objective entry this morning. I think another place you could probably enter would either be 720 or 735. You've got a big line of resistance here at 735. You can see all these touches here. Got a touch here, and we've got a large volume over price area here that lines up with 735. So just remember your trading tenets. Recapturing levels from below is bullish, and those are potential buying points on the way up with stops below. And so let's just go through a little trade for those of you that may be new here. Let's just say you got your gap fill lower to open the day and you get long at 700. And so you're long, and everything starts breaking your way, and you recapture 720. That's a great place to move up your stop. So you break above, and let's say things continue to go your way. You break above 730, good place to move up your stop. And let's just say it gets to the gap and gets rejected there, and then comes back and loses 735 again. Well, then your trade is stopped out, but you're already $30 to the good, and then you can recalibrate. Say it comes back down to 720 and then comes back up again and takes out 735. You can re-enter the trade, and maybe the next time it breaks up and fills the gap. So you can use these levels as places to help manage your trade. You wouldn't want to just sit there with your long and have it come up and then come all the way back. That would be kind of frustrating. You know, if you get a trade working, stay in it as long as you can, and then at a certain point, it'll stall and pull back, and that's where your stop, the one that you've been moving up the whole time, comes into play, and eventually you'll get stopped out of the trade. But by that point, you're already a nice winner. Microsoft down a little bit on Friday, 1.66%. I noticed it was up nicely this morning. I think your pivot is right around this 269, 270 area. If that holds, then these upper areas come into play, and the big breakout would be above 277. You've got a gap in between. You've got the Thursday high here at 274.50 at the top of the gap. So that's going to be an important level on any up move. But as long as 269 holds, I think you can be long Microsoft. Amazon, we're back here in the middle of the range. I think that's a tough trade to take. I think this sets up exactly the way it did the other day. I believe this was Thursday. We said, on the open, if they drive it down to 2,400, that would be a nice entry. And those of you that did that got a $100 move out of it up to the top on Thursday. And so now here we are in exactly the same scenario. We've got support at 2,500. We've got a gap that starts at 2,510, and then, 2,488, and then we've got the prior high at 510. So unless you're a real sharpshooter on that opening candle, I think you wait to see if it breaks higher and looks like it's going to break out, or they bring it back to 2,400. And I would be a buyer there at 2,400 with a stop just below. That seems very objective to me as far as a long entry. And then you can hope for a move back up to the top of the range at around 25.25. And then above that, you got the potential for a run up to this real big gap that happened on earnings. Oh, and don't forget, they executed this 20-for-1 Friday after the close. So, all those numbers that I just spoke of are going to be all recalibrated, down with the new scaling, because you're just taking this number and dividing it by 20. So you're going to really knock down the price. But that could also be the opportunity as well, because people that can't afford 2,500 or are somehow reluctant to buy shares, one share for 2,500. Now it's going to be 20 times cheaper. So we may see a post-split bounce. I think that's a positive. It'll remain to be seen, how much of a positive. But I think because of the split, Amazon should be on your radar today for, in the next 10 days up into the FOMC, how that might play out. Google had the gap down, starts at 23.26. I think 22.75 is your pivot this morning. That's pretty clear. We've got a big line of support here at 22.75, and also if you go back in the chart, support, bunch of support in here, bunch of support back here, and we've got a large volume over price area right here. So I think you can stay long above 22.75. I would be concerned if we lost that level. Then it would be open down to coming back into these old gaps. So I think that's your level there, 22.75. Netflix. This 201 looks to be your pivot with support at 195. I think if you came down to 195, that's the area that has to hold a layer of support here, resistance here, and support back here. So I think above 201, you got an opportunity to come up to 210. And then I think if price were able to get above 210, I think you could see some acceleration potentially up towards 230 if all the stars align. Semiconductors got whacked. On Friday, Micron got a big downgrade. It was down 7%. Kind of took the whole sector with it. Back into this 242.50 area. I think the real focus on semis is holding 240, and then you've got this upper gap that begins at 244.77 and then up towards the prior high on Thursday. So I think if the Qs are doing well, then most likely semis are doing well, and vice versa. Big risk on, risk off type of a sector. So I think you can stay long against 240 with a pivot here this morning at 242.50 with a big gap above. That's really about $4.25 wide. So that's going to be a good one to keep an eye on, which starts at 244.77. I want to take a look at oil. There was big news on Thursday that they were bumping up their quotas. OPEC, I'm talking about, bumping up their quotas at 650,000 barrels, I think, a day. You can see on the chart that there was a big look down that actually came down and almost touched the 20 down here at 110, but then they bought that right back up, and then Friday was a big day, up about 3%. The thing you got to watch on oil is production, not quotas, because if you go back and look, they've been raising quotas, every month, every 6 weeks, but they always fall short. They are only Saudi and the UAE are meeting their quotas. Most of the other countries are missing their quotas. They don't have the spare capacity to do the extra pumping. And so there's a deficit there. And we all know the Russian issues. I sent you a note on Friday talking a little bit about that. Now they're talking about relaxing export controls on Venezuela. But, from my point of view, whatever Venezuela is producing, they're already selling. They're either selling it to China or, wherever it's going. It's not like, oh, great, man, we got a new customer. Right now we can pump more. I think they're pumping all that they can and, selling it wherever they can. And if, the U.S. wants to try to horn in on that and get some of that production, that's fine. But it's not gonna change the world price. It's not gonna change the dynamics of what's going on out there. So I think as far as oil goes, production quotas and jacking around with Venezuela is not going to change the picture. So I'm still bullish on oil. We're walking up the 8-day here. I think a big line to watch is this 125 level, which was where oil got to at the onset of the Ukraine war. And you can tell from the chart the door is open for that move. And if oil were to be able to take out 125 and hold it, you can see back here, price did not hold it. We had 3 looks above, and then it finally let go. This time around, if price can take out the prior high and hold it, then you got an open path to that all-time high at 147. So still bullish oil. I think as long as it stays above 415, that's the real pivot on oil. Below 415, you would probably come back and test some of these lower levels. But as long as it stays above, I think you can be long oil. XLE is working its way up in this wedge. The thing here to watch is the windfall profit tax discussions in Washington, because if they come in and say, okay, all the big boys, ExxonMobil, Chevron, any other name that you want to put in there, we're going to take 25% or whatever it is of all this money you're making on high gas prices, and we're going to take that might even bleed into the refiners. You might see a giant red bar on XLE regardless of what the price is doing, because you're just taking profits away. And I think in that scenario, oil goes even higher, because if you've taken another big incentive away from producers to go out and look for oil, why should we go out and punch a bunch of wells if you're just going to take the profits? You may see a big spike in the physical price of oil, and that kind of a policy would just make the whole thing worse. So staying long XLE, this wedge lines up with the 8 EMA, and I think that's a good level to watch, because if you fall out of this wedge, then you could come back and test this 83 type area. So there was one other thing I'm trying to think of. It's related to oil. Oh, hurricane season. One of the dynamics that has happened over the spring is the normal cycle of building inventory has been interrupted really across the world. If you look at Europe, trading way below the 5-year average on storage, both in natural gas and in oil. Same thing in the States. Oil inventories are at almost record lows for nat gas and oil. And so can you imagine if some storm hurricane were to make its way up into the Gulf of Mexico, even if it doesn't hit and cause damage, what you typically see is refiner and producer shutdowns as a safety precaution, because you never know which way these things are going to turn once it gets up in there. With storage as low as it is, if you see any kind of refiner shutdown, or we're pulling all the people off of Gulf of Mexico oil rigs, you could see an absolute moonshot in gasoline, nat gas, and oil, as those refiners are down for 10 days or whatever it takes. Once they start it, once they close them down, then it takes them a week to get going. So refining capacity has really been a limiting factor out in the world, and any kind of capacity shutdown is really going to spike gasoline and oil prices. So watch your weather maps. We're in the thick of hurricane season. It's just getting going. So that'll be something to watch throughout the summer with inventories at their lows. So let's wrap it up there. Good to see futures green. I think we're in this chop zone. Watch the 8 and 20 as support, and watch the 50 as resistance. Moves outside of those will really determine the next leg of this move, whether it's down or up. And we've got the FOMC and some big option expirations next week to keep an eye on. So if you're new here, thank you so much for spending some time with me this morning. Use the levels to your advantage. Work your objective trades around them, and I think you'll become a better, more profitable trader with the objective levels to look at. Hit the alarm button, hit the subscribe bell. Jump over in the show notes. You'll find a place to drop in your link to the blog site where you can drop in your email address, join the team, get all my content morning, noon, or night. That way you won't have to hunt for it. It'd be great to have you. And you'll also get an invite to our trading room. Even if you can't take advantage of that during the day, it's a great place to go after hours. Thumb through. There's a lot of good traders in there with good ideas. And you can zip through 8 hours of chatter and pick out the names and the levels that other traders are focused on, and you might find a nice trade for yourself in that information. So let's wrap it up there. Hope you guys have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.